The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us. We have the Dow Industrials down 109, Nasdaq off 69, S&P's down 14.5. Gold contract up $2.50, trading at $12.92 an ounce. You get silver flat, $15.66 an ounce. Light sweet crude down 45 cents, $51.13 a barrel. Notes and bonds, 10-year note up 4 ticks, 122.03. 30-year up 4 ticks, 145.28. King dollar down 51 ticks, trading 95.215. The euro is at 114 to 1 U.S. dollar. The yen is at 108, and the pound is at 128.53. Our phone number is 877-927-6648. Give us a call, folks. Let's go over to the pound first. So, if we take a look at this pound, folks, okay, the bottom line, it looks like this thing's going to blow apart somehow. Meaning, the votes tomorrow, one votes tomorrow. Doesn't look like she's going to make it, and the real question is going to be like, are they just going to put off Brexit?
So when you say it's going to blow apart somehow, what do you
that the pound wants higher price. So I suspect what's going to happen is going to be either a no Brexit or an extension of of this March 29th time frame, because the pound is lifting its head up right now.
Yeah.
And man, they're in a mess over there.
Oh, they sure are.
They're in a mess.
They sure are.
If we go to the gold market now, this is going to get intriguing. Now, what you can get out of this, folks, this is pretty wild, actually. So we had Barrick Gold take over Rango Resources, and that got actually done on January 1st. And they only announced it 6 weeks ago. So they got that done pretty quick. When that got done, that made Barrick Gold the biggest gold company in the world. Well, what had happened, they took that crown from Newmont. And now, 14 days later, Newmont's going to be the biggest gold company in the world again.
Okay.
Newmont's taken over Goldcorp. But what I want you to look at, and this is what's serious about prices in general. So Newmont is buying Goldcorp for 0.038 per share. Yeah, 0.3280.
Yeah, so 0.328,
Yeah.
So almost a third of a share.
Right.
0.328, yeah.
And then plus 2 pennies.
Right.
Okay? And watch this, folks, okay? This is what's important.
And that was a 17% premium, just putting that as to where...
Of the last
Gold
20
Corp,
days.
there you go.
Right. But, when you look at that, that's nothing. It's like, when I look at that, the point of this story is get stop losses in. Because you can see Goldcorp was trading at $56 in 2011. It was trading at $20 at 2016. But it's worth what it's worth. And right now it's only worth $11.50 when you do the numbers. Isn't that wild, though?
Yeah.
It's hard to comprehend. You know what I mean?
Get your stops in place. Where is that?
Well, what happens, what people do is they'll own it up here, and they think for some reason that stock's going to go back there.
Sure.
And
so you're not talking about right now. You're saying a lesson
in general.
Don't let this happen to you, right?
Right. Because what happens...
I thought you were talking about get your stops in right now, or I was like,
So what happens is that stocks don't have to go back to where they were. Not even close. I mean, this is a takeover, and guess what? It's not even at the swing point from April of 2016.
Sure.
The good news inside the metal market is that, number one, they're consolidating. And the last time that this happened, these equities were buying at highs versus lows. So we'll see if they were right this time. You know what I mean?
Yeah.
The scramble, because there'll be more of them now.
Yes.
This game is on here. So what we haven't seen yet is what a large producer. So now picture it, both of these companies are going to be battling it out big time.
Sure.
And what we haven't seen yet is that what will they buy an exploration company for that is close to producing, coming
online, yeah.
Yeah, what are they going to pay for gold in the ground? Because they certainly haven't paid anything for Gold Corp. Well,
Sure,
they paid the market. They paid what the market is. That's, you know, at the market right now, 17%. That's it.
Yeah.
You know?
And we'll see, right? It's not quite trading at that price, so the market's not giving it a 100% probability it's going to get done. So maybe the Gold Corp share owners might say that they want a little bit more.
Yeah, well, what happens is this. See, Newmont went down on the deal, so it's still, you know, it's because...
That's usually what happens, though, isn't it?
It is.
I mean,
it is,
so
exactly. Exactly.
I wouldn't give too much.
You know?
It's pretty much expected.
They, this is a friendly deal, though. This is not a, you know, the shareholders will still have to vote on it, but it's a friendly deal. I mean,
so what did you say it comes to in terms of what,
it was 11.54, but that was before Newmont was down $2. So now you just take that and multiply it times the price of Newmont, and that's the price plus 2 pennies of what the takeover is going to be. Because it's not a cash deal.
Yes, right.
You know, it's paper. It's a paper deal.
Yes.
Pretty wild.
Yeah.
But we'll see whether the other ones can move. I'm really curious as to what they're going to pay for in the ground, though, because that's the, you know, per ounce close to coming out of the ground or in the ground. You know, in Gold Corp's case, I can't break it down on the fly here, but you can break it down, but it's not a big number, that's for sure.
The only thing I'd add to that is that if they're not getting the premium that they kind of talk about in that deal, and it's expected to pull back, but you may see some of the shareholders not be up for it if that premium disappears by the time they vote for it. You know, because if you're just getting almost market price, nobody's going to sell the company at that. They can go sell that on their own. You know, I mean, they can go sell it in the market.
Oh, listen, it's
yeah.
You know, and you can see, no one has a big position. This is Gold Corp up here, so it'll be hard to, you know.
Yeah, you're going to have to get a consensus, right, where one person's not going to be able to say yes or no and drive the market.
Yeah, because you can see when you pull this up, the Van Eck, that's a, you know, passive fund. That's the S&P. That's not the S&P, but that's a passive fund that owns 5.8% of it. First Eagle is actually, that's a metal company, not a metal company, but a metal hedge fund. Canadian Imperial, they're into a lot. Then you got BlackRock, and you got Vanguard, Royal Bank of Canada, TD Ameritrade.
That's a lot of banks.
Yeah. So the bottom line is that you do have action, and the real question is going to be, what do they spin off, and what do they keep, and how efficient are they going to get those businesses? Because, you know, Mark Bristow, the new CEO of Barrick,
yes,
you know, saying that, the gold company's got to clean up their act, you know.
Yeah. So this one's a $10 billion deal. The one you were talking about was 5.4 in terms of the Barrick gold that just got done.
Yeah.
And yeah, they're talking about, which instantly spurred speculation that rivals were going to have to respond when that last one got done, and it didn't take long, as you said.
Right.
Yeah, just going over. So you have Gold Corp trading higher, of course. Yeah.
Let me see something else. MAX. I'm going to go into this minus, because this is an interesting play here. So minus, okay, that hasn't moved yet. That's minus. Now this company here, folks, is still in exploration, but you can see this acceleration up here. This went from what, 60 cents to $1.11.
Only done 12,000 shares today.
Yeah,
so.
And we can go through this, but this is about, look at Barrick owns 19% of it.
Okay. I saw something like they only do business in Idaho, maybe.
Yeah. Stay right there, folks. Tommy and I come right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We have the Dow down 104. You get the Nasdaq off 61. S&P's down 12.5. And yeah, let's go over the
PG&E.
Yeah.
My goodness, I had not seen this one.
Yeah.
I must have missed it somehow. I'll pull it over here.
They're going to go BK.
Quite a story.
Yeah.
Yeah. So PG&E is a unpleasant reminder how the bond market can quickly unravel in terms of the California utility. Of course, they had the fires out there over the summer. They held investment grade rating from all 3 major credit raters just a week ago, which is just mind-blowing, is going to be filing for bankruptcy at the end of this month with liabilities of potentially $30 billion from the wildfires. Bonds traded above face value just 2 months ago, and now they're 85, which is remarkable. They're there. I'm sure that ties into somehow. Maybe they're going to be bankrupt, but come out of bankruptcy. Yeah. Right? And you know what? Let me get I'm just going to post a chart. I didn't realize we didn't have a chart in there for the den. Get them hooked up. There we go. And get back. Oops. Oops. We'll find the screen we're on. And it's the 4th one, of course. There we go.
So, yeah, because I want to show you something here. This is pretty bizarre. I was talking about this last week, folks, and this is where the... Let me just pull up the chart first. You'll see PCG, is that? No.
What do you look? Canopy growth?
No. P. There it is. So.
Okay, there.
When you take a look at this, this is a mess. But this is, don't buy this thing, man. This is going to go to zero. You know, you're not going to get an $8 stock when you go in Chapter 11. It'll go all the way down. The thing that's bizarre, though, is it takes a while. But look, watch this. This is pretty wild. I got to find this article. So the CEO. Resigned over the weekend. But what I want to show you is
that one.
Here it is. Here. This is when. Okay, so Chief Executive Officer Geisha Williams is leaving California's largest utility owner as it nears potential bankruptcy. But as we get down, I want to show you something. Okay, so the company had 2/3 of its market value wiped out since November's Camp Fire, the deadliest wildfire in California history. Investigators have been probing whether the power giant's equipment ignited the fire along with potential liability. Now, as you get down further, what I want to show you, and this is the... Okay, so under Williams, PG&E spent millions of dollars trying to convince state lawmakers to change the legal doctrine known as inverse condemnation, under which utilities are liable for damages if their equipment is found to have sparked a wildfire, even if they weren't negligent. Williams called the doctrine bad public policy that made utilities the default insurer of the state. She said wildfires were a symptom of climate change and hotter and drier conditions, you know, sparking more frequent and intense fires.
Yes.
I totally agree with it. I mean, this is like insane. You know, they're in a freaking desert, man. You know, it's like, okay, if you want utilities or not, why, you know, it's, and they, you know, they're going to get a lesson because...
And I think they did do some stuff, though, here. So as they rejected their request to change wildfire liability, they did pass legislation in August that's going to help them pay for lawsuits arising from the fires.
The wine country fires, yeah.
Okay, a different one. 3 months later, utilities equipment again is being looked at as a possible source of the campfire. Let's see. Because I had heard, and we'll have to dig into it, that they had gotten that type of legislation passed. That as long as they are not negligent in their capacity, that they will, maybe it's just be able to take out loans, or there's something that I believe was done to help remedy that. So we'll see, though.
Yeah.
I think part of the problem, though, is that the market thinks they may have been negligent. You know, we kept hearing, so that won't affect that at all if it comes out that they weren't servicing things as they should. If there were, you know, because there were reports, remember, that came out that they were like hiding that there was a service call or there was outage, whatever it was, right around that time.
I guess the larger issue that I'm bringing up there is that, guess what? The state should have some, basically, insurance on that deal. Their utilities are regulated for a reason. Do you know what I mean? It's like, okay, now you're going to go BK.
They are, just to put it. They're also for-profit companies that might cut corners, as we see all the time.
Oh, yeah.
You know, and that's where, I mean.
But they're dreaming. If you don't think fires in California are going to just keep going, that's my point, I guess.
I know, but you're making the argument like that they meant that they're not negligent, and we don't know that at all. I mean, that, you know, they're going to happen, but we don't know what the case was with.
No,
this
I'm making the argument that the way the law reads, whether they're negligent or not, they're responsible for it. That's what the law is. That's what that was saying. They don't have to be negligent, and they're still going to be responsible for it. 877-927-6648. Let's go take a look at that dollar. So the dollar, folks, bottom line, you know, we'll see if we get any juice on the way down this week. You got some juice, some good juice last week. That number, you know, right now is 94,635. Try to get higher on Friday. You know, bottom line, stayed up there. You know, this morning we'll see which way this wants to go. But when you start looking at when you look at the pound wants higher price, which will put pressure on the dollar. The euro, that's going to be the test case here, because the euro had a nice week last week. Looks like it's rejecting lower price out here this morning. And then if we go into the yen, and we take a look at the yen, this is a sideways move out here today, but that yen also looks to me on a longer basis that it wants lower price. And if that's what you get, that's going to be like the perfect storm for a weaker dollar, you know, across the board. Because those three, you know, the euro is the largest weighting structure. The yen and pound are, I think, about around the same amount. If we go take a look inside the NDX, the strength versus the weakness out here. Oh, Lululemon, we're buying clothes. Up $10. Look at that move. That they come out with big numbers at Christmas, evidently. Yeah, let's see. Lululemon jumped early trading. Fourth quarter guidance, they increased it? Yeah, they increased it.
So comp sales increased to the high single to low double digits for the current quarter, which ends February 3rd. That's quite a number. Comp sales, you're talking about 8, 9, you know, 10, 11, 12, 15%, whatever it is.
And they're expensive clothes.
They are expensive clothes, man.
And you know what's going to be wild, folks, is that we'll see. Nike, I believe that it's going to be this month, they're doing a whole yoga deal, guys and women. And they're going to try to basically, well, not try to take them on. Nike can take anyone on.
There you go.
Yeah, down there. Nike expands its first ever yoga line.
What number, please?
Number 12, I think. Yeah.
That's hype beast. I tell you what, let's go because they're pushing to Lulu's territory.
Okay.
It's not, of course. I guess we can. I don't think that's.
Oh, I see. I see what you're saying. Right.
Yeah.
Right.
But guess what? Those headlines. There you go. Right. So they're going to push to their first ever yoga line and then push into Lulu's territory. I'm just clicking down one more time.
Yeah, because now people are wearing them, not even doing yoga, right? I mean, they wear them
it's
everywhere.
athleisure, yeah. And it's more than yoga, to be fair.
Yeah,
it's all types of exercise.
Right. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials down 127, Nasdaq off 57, S&P's down 14. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials right now down 126, Nasdaq off 56, S&P's down 14. Let's go to Ken in Sarasota. Hey, Ken, what's going on?
Hi, guys. How are you?
Morning,
Doing
Ken.
great, man. Yourself?
Good. Very good. I just caught part of your conversation on the Goldcorp and Newmont deal, and I gather you figured the Goldcorp price was fading a bit here. I've had Goldcorp for quite a while. It's one of these old ones I never got out of when I should have done, so I've been kind of waiting for it to recover a bit. And I'm just looking at it now and thinking, The Newmont chart doesn't look too bad compared to some others, and I'm wondering, and I don't know whether you covered this or not, would it make sense to hold on and collect the Newmont stock?
So you're saying, should you buy? Yeah. No, it should.
He has Gold Corp.
Yeah.
He's going to get Newmont shaky.
Should I hold and wait for...
Yes, yeah, definitely hold on.
...to Newmont, or should I just get out now?
No, hold it. Newmont has a great chart. There's no doubt.
Yeah, that's what I'm saying. I was surprised because I remember in the old days, Newmont was one I would never even consider.
No, it was a dog. But they got rid of their, the amount they... cost them a fortune when they had to buy all the gold back because they had
the hedges, I remember
they hedged it. But no, I'd keep Newmont. Newmont has a good chart, man. What's happening out here today, folks, is that it is getting slammed down 220, and it's going into strength that it had out there going back to the 19th, and it's going to have some volume. But yeah, I'd keep it, man.
Would you buy Newmont here? Or would you wait a while to see what happens?
No, I mean I mean, it looks to me like Newmont can actually get into 32 out here today, or 32.64.
Yeah.
Or you could just wait for a couple of days.
Yeah. But or maybe sell a 32 put if they have such a strike, or a 32.50.
Yeah, let's see. Yeah, they do too.
Yeah, that's only 4 days out you're looking at.
Yeah.
Just to put.
Okay, that's all.
Yeah. So you got it two different ways.
TLT?
I'm sorry, what?
What do you think about TLT?
Wants higher price. So
yeah, it seemed to hit 123, and it seemed to hit resistance there, but I guess the volume hasn't been too bad as it pulled back.
It's really light. So when we hit the 123, you got 21 million shares. Last week you're pulling back with 8 million. There's no sellers up here. I mean, listen, it's intuitively you think that we've been talking about this a long time. That listen, the bonds, the Fed wants rates up and all this. I don't know if they want rates up anymore, but I mean, that was the mantra for a long period of time. But the market, bottom line, is buying notes, bonds, all of the above, and driving rates lower. And I think that has to do with just the market in general, that we're in a much larger correction, and that's where people are going to say, I just want my money back. I don't, you know what I mean? I just don't want to lose money.
Yeah. Okay, thanks a lot.
Great hearing from you, man. I know that voice. I like it.
Yeah, it's been a while. I don't call in anymore, but I listen from time to time and keep an eye on it. There's not too many guys out there are able to call the bond market like you do, and of course you've had gold for so many years. So
I appreciate it, man.
I always listen, keep an eye on what's happening. Oh, let me ask you another question.
Yeah.
Tommy, when you do the morning news update, you never cover bonds. Why is that?
We'll have to look at that. Is he talking to me or you?
I'm talking to Tommy.
Tommy, I'll have to take a look at those bonds. Sometimes...
Yeah, one thing I always want to do is hear what Tom has to say about the bonds. And when you do it, you don't cover them. So I'd love it if you did that.
Yeah, well, throw that in there.
We'll have to throw it in there.
Yeah, totally.
Excellent. Okay, thanks a lot.
Thanks so much.
Thanks, Ken.
All right.
Bye.
I think, it's probably just because when you're doing it on the Nadex, they didn't have the bond chart. That's it.
Say.
Yeah,
maybe
exactly.
you can get that Bloomberg up for me.
Totally. No, totally. Yeah, right.
Sometimes that Bloomberg just ain't up yet.
Right, right.
And, we were looking, so let's pull over the article, because this is what I was, it's not quite unclear, but this is kind of what I was talking about. We pulled it up. So just in August, wildfire bill to aid PG clears legislature, despite, of course, ratepayer concerns. That and it was signed by the governor. I'm not sure, though, if this is just dealing with past fires. So it was a sweeping proposal. Despite warnings, of course, when you're shifting that responsibility to be able to raise hikes. Lawmakers approved a bill that makes it easier for the utility company to recover wildfire costs from ratepayers. It also designates $1 billion cap and trade money for kind of removal of dead brush and so forth. And let's see. So the bill drew support, of course, from PG&E. Trying to get to the... So under existing strict liability, utility companies are typically responsible in court for providing compensation for property damage if its equipment causes that fire. If utilities do nothing wrong, they allow customer rates to rise to offset the losses. But last November, they rejected a request by one of the companies to recoup nearly $380 million, a ruling that alarmed the power companies. So let's see. I'm trying to get... that's where I think that this was changed. I think it was foregone. That's why I wonder what that Bloomberg...
You know, I think that changed, but I think that was backward, meaning that they're saving the wine country.
But the final bill put together by the Wildfire Conference Committee took another avenue to reduce the utility company's financial burden for property damage that may arguably hurt. And I think I'll read it a little bit more. We'll get into it. Either way, it's interesting because they could do the same thing retroactively for this fire if they really believe that's how things should work, right?
Right.
So it really is going to come down to whether they were negligent or not. Because I believe that if they were not negligent, you saw it happen here. It was passed in both houses. Governor signed it. And I'll read it more during the next break, maybe, and dig into it.
The company's not going to wait for the politicians. That's the essence here. And
what does that mean?
That means that's why they're going to go BK. So they're not going to wait for some other government entity to turn around and save them, because the courts can save them in a second and just wipe everyone out and start again. No, that's what they're going to do. That's what that bankruptcies are going to be all about, because it's going to wipe out the liabilities that they have. And if they do it this afternoon or next week, then they get a new company, and then they're off to the races again. Some of the higher volume equities. Now today, the deal about volume out here today is going to be big, folks. And the reason being, I suspect it's just going to be, you know, nothing drastic out here. You know, we're going to go sideways to lower. But if the volume does not expand, that is saying that we're not done going down. You know, meaning, no, that means that we will go back up. That's my point. And we'll go back up pretty quickly. So it's going to be kind of cool watching this whole thing shake out. Because, see, we didn't have any volume whatsoever all last week. And 5 days with contraction of volume is really hard to do. You know, so it's going to be a big day out here, you know, to give us an idea of the rest of the week of what we're going to have. Because we're certainly going to have a lot of numbers coming out, but next week those numbers are going to start, as we keep going into January, it gets kicking in higher and higher and higher, you know, as to the amount of numbers that are coming out. If we go take a look at the inside the Dow Industrials, the strength versus the weakness, excuse me. You got United Health putting 7 positive points, Goldman 5, JP Morgan 4, taken away from it, Boeing -24, Apple -15. So Apple's having a hard time out here. 150. Apple's going to be a good one to watch, too, to see whether they get an expansion of volume or not. Stay right there, folks. Tommy and I are coming right back. Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials down 107, Nasdaq down 45, S&P's down 10, and
a little bit of clarity, right, on that legislation in terms of how liable they are. So last year, California passed SB 901, and that was to deal with previous 2017 fires. And it did go into that if they weren't negligent, they could raise rates on customers, which, of course, that's contentious because people have to pay their bills, man, and, you know, it's tough. So they can raise it, but the law, SB 901, doesn't take into account fires starting in 2018 and beyond, including the Camp Fire one, which was the dramatic one we just are dealing with. And so in going through this, there's another article talking about that people were trying to add an amendment onto that bill to include 2018, but yeah, it doesn't look like that's done yet, as we say. And so it'll be interesting to see how that plays out, man.
Yep.
Yeah.
And you know what normally happens, and this is kind of interesting too, because the market really doesn't know yet whether that's going to zero. You know, it's cut in half. You know, but if they're BK, then that's zero. You know, and they start again. You know, even under Chapter 11. You know, so because it'll be the equity holders get wiped out, the bond holders are basically going to get paid. We can see that the bonds are still, the last article, 85 cents on the dollar. You know, when before they were a lot higher than that, though. So,
can I just see before? Let's just see this one. If they're still sitting at 85 cents.
Yeah, 85 cents.
Yeah, and there's the chart. So they were up at 110 almost at the beginning of November. They were at 110 in October.
Yeah.
Not that bad for what's going on there.
I know. Yeah. Oh, believe me, I know. It's
yeah.
Well, they're not. You know, California needs electricity, and that's
right.
So, yeah.
Right.
They're gonna have to figure out that mess.
Yeah.
They're really gonna have to figure out what can be done in order to have less fires out there. Which, the way they build everywhere. So I think that's gonna be a tough one.
Yeah.
You know. We go take a look at the, let's go see what good old Amazon's doing out here. So, no, that's not Amazon. Yeah, so this is already rejected lower price out here this morning. So it got down to 15.95. Rejected that. If we go with FedEx, so check this out. FedEx, they're going to get, listen, this is just pretty wild, man. They're getting in the market of delivering what trucks normally deliver.
Okay.
You're talking about washers, dryers.
Interesting.
Yeah, I know. So FedEx is testing full-service residential delivery of bulky products, a $9 billion market that couriers had left to more traditional trucking companies because large items don't fit well in their sorting operations. You know, FedEx Freight is beginning stages of piloting a new service, FedEx Direct Freight, that will move larger, bulky items to customers' homes and businesses, and even offer light assembly for an additional fee.
FedEx spoke and said in the email, demand for these types of delivery service has grown in recent years, and we expect it to continue to grow. The pilot started the last few months. It's going to be pretty wild if, you know, because that when you get down here, too, then you get into this white glove treatment, folks, which is pretty cool. So the operations often require 2 people on a truck, and what the industry calls white glove service, because the goods are taken into the home and set up. The customer often rates the service in a survey. And there's no, and you can see JB Hunt, they got a great chart, JB Hunt, too. These are the companies, large truck companies, including XPO Logistics, JB Hunt, and Ryder have made acquisitions to offer nationwide delivery services for bulky items. And if we go JBH, I think it's JBH, you'll see. JBH, they... Oh, there it is, yeah.
You got it? Good. The third one, yep, JBHT,
right,
third one, yep.
Yeah. So, you pull this up. Well, it's not that good looking. 1 second. Yeah, it's still at highs.
Yeah.
You know, this has been on quite a tear. Yeah, and you can see, so that's at 97.
They were saying in there, as the e-commerce action for those items grows, people got to deliver them. Whereas you used to go to, not to bring it up, Sears, right? And Sears had their own delivery people.
Right.
Well, now you're buying it off an online retailer that might not have their own delivery people or something like that, right? And they're paying somebody else to ship that item and deliver it.
Exactly. Yeah. And you can see 6.2 billion 2015, 8.6 this year, next year 9.5.
All in North America.
Yeah. 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 Big delivery. We want everything delivered. That's the bottom line. Everything delivered. And the thing that's really cool, you know, I've got that white glove service a few times. You probably have too.
Definitely.
And they do a great job. Yeah. I mean, they literally do put gloves on, and they put those little booties on their feet.
Sure. Yeah. They don't want dragging that dirt. Right. That's it, for sure.
And guess what? It's not that expensive compared to the appliance that you're buying.
Yeah.
You know, it really isn't.
And most people, you not just want it, you need it. As in, there's a reason why the truck has 2 people. Because you need it.
Yeah.
So you're at home by yourself. I live at home by myself.
Oh, yeah. Right.
You can't move those items no matter how strong you are by yourself.
Right. No doubt.
Without destroying your floor, your walls, your corners, everything, and your doors. Yeah,
big time.
Yeah,
no doubt. Let's go take a look at the silver market. So actually, I want to look at the copper market, because copper, it looks to me a couple of these copper stocks want higher price, and copper itself hasn't basically picked its head up yet. So if we look at this copper contract, you're 262. Okay, this is, got a little juice January 4th. Yeah, this still looks like it wants higher price. This is going to HG1. So if I put that on a continuous, okay, I see what it's doing. So copper's going into strength that it had, is that 2000?
November of 16.
November 16, okay. So we'll see what I can get out of here.
That's quite a bar. We went from like 219 to 274.
274. And, you know, we get down this month it's a 254. It's rejected that. You're 262. So we'll see if that's the number. But if you take a look, like, this stock has got hit. Looks to me like it wants to get off the bottom, which is SCCO. You know, that broke topside going back to April. It's come back to strength. And then Freeport McMoran, which we actually bought the gold report this morning. Now this is a double play. This is a double play actually on copper and on oil. This is down from, look at, 20 bucks. Yeah,
just the beginning of last year.
Yeah, and let me put this longer actually. Yeah, I like this setup. Whoops, do that.
Yeah, I think you have to.
Yeah, I want to get rid of that thing, right? So when you take a look at this, you're going to see this has been bouncing along the bottom for quite some time. But you can see that it looks to me like you're building strength to get up into this $19 area. And that, when Freeport McMoran moves, man, it moves.
Okay.
It moves. Dow Industrials right now down 125, Nasdaq off 50, S&P's off 12.5. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 123, Nasdaq is down 50, S&Ps are off 12. And coming up this Wednesday, the 16th of January, got our man Mr. Dave White's going to be doing a workshop for his subscribers, and you can be a subscriber right here, right now, folks.
That's right. So nuclear weapons for traders, the second installment. He's going to be in there talking about, of course, he puts together some awesome oscillator charts, right? He's using machine learning on kind of what is generating those charts, and he's going to be in there with his subscribers to Path of Least Resistance and Technology Insider. He breaks down those 24 sectors by ETF and the Path every morning. And I'm just going to click on here. You click on Path right on the front page. You can scroll down and get kind of the action that he's going to be talking about. Each day he breaks down those, and he's going to show the relative strength using wisdom of crowds approach. And I'm trying to get... He's also going to be taking a look at candlesticks, why there's statistically only 25 that make up every pattern, discussing the combinations that make those patterns and how to statistically mine those patterns. A deep dive on how the various sectors look for 2019.
Pretty cool.
So you can check that out. That's going to be Wednesday, 5 o'clock for subscribers. And, of course, that will be archived, and you can sign up for Path or Tech Insider. And, of course, Dave's got a new issue of Path out there every morning, including this morning. So check that out. 30-day money-back guarantee, as always, for new subscribers.
You know, if we go over, I believe this is interesting. It's either the Nasdaq or the S&Ps. We bring this back
today's going to be a big anniversary, folks. This is when the market started going south in 2007. Is that 2000? Oh, that's 2000. That's 2007. Okay, so it's not the Nasdaq. That started.
You're on the SPX right now.
I'll have it this afternoon. Yeah, no, I know. Okay. So it's probably the NDX 100. But this was the beginning of the downdraft in a huge way that many years ago. Today's the 14th, right?
It is. January 14th.
Yeah. Stay right there, folks. Fast Market coming up next. Then we get our Basil Chapman, Steve Rhodes, Dave White will be back. Thanks, pal.
Thanks, man.
Wow! Go get him, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.